2022 has been a tough year, but it's been especially tough for one group of Americans. The middle class has gotten absolutely squeezed. They've lost more than the people who make more than them. They've saved less than the people who make less than them. And they're being hit the hardest by inflation. How did this happen? I'm gonna walk you through the financial data that show how the middle class is feeling the squeeze. First, just who makes up the middle class? The Federal Reserve classifies American households into 6 income categories, and the middle class is made up of the groups in the middle of US income distribution. That's households that earn about $48,000 to about $127,000 a year. Data show this group is getting hit hardest by just about everything. New research from Bank of America found that middle-class Americans were seeing prices rise by 9.4% in May from a year before, versus an 8.6% inflation rate for all Americans. That's the highest rate for all income groups. And it's largely because folks in the middle class spend a larger share of their income on driving and auto expenses, and those costs have skyrocketed. The middle class has lost the biggest share of its assets in the stock market. The loss has been larger than even the top 1% of households, which own more than half of all equity and mutual fund shares, according to Federal Reserve data. So even though middle-class households own less stocks, they lost a bigger percentage of what they do have in the first quarter downturn. Fed data also show that the middle class is taking on more debt. Households earning between $75,000 and $127,000 now hold the most consumer credit debt of all groups, outpacing even households that earn twice as much, or more. And data from Moody's Investor Service shows those upper middle income Americans have less savings than every group except the lowest income Americans. And they reduced their savings in the fourth quarter of 2021 and the first quarter of 2022 by more than any other group. So why did this happen? Economists at Moody's say it's largely a result of these middle-class households being excluded from stimulus checks and income-based tax credits. Many also lost their jobs during the pandemic and received unemployment benefits that were less than their previous wages. With lockdowns ending and prices rising, they've eaten into their savings and taken on debt to keep up with purchases. Wages for the middle class are increasing, but well below the rate of inflation, meaning these households are losing money every month. Only the lowest income households are seeing wage gains that are above inflation, according to calculations by economist Aaron Dubé. The bottom line is, the middle class got squeezed to start the year, and with inflation still hot and markets continuing to struggle, there's no sign this squeeze will be short. We heard AZ tell us on Nas's classic album Illmatic that he was visualizing the realism of life in actuality. Forget who's the baddest. A person's status depends on salary, and my mentality is money orientated. I'm destined to live the dream for all my peeps who never made it. That's all for now. See you next time.